Hello traders, welcome to my YouTube channel. My name is André Cardoso. I'm a global market analyst. As always, I used to share with you some of the content, some of the patterns that I find inside the market. And today it's Friday, the last day of the trading week, and I want to share with you some of the events that I shared among the communities and that I'm searching inside the market. So thank you for being here. Thank you for following, for those who are following my work for longer. And if you are here for the first time, thank you for being here. I hope somehow you take advantage from the information that I provide. My objective here is not to provide or to share with you specific trading opportunities. I'm here just to share with you a concept, a trading, let's say a trading strategy that allow us to try to take advantage from the market using a friendly risk reward approach. It's important to get familiar with the risk that involves the trading as a professional activity. So if you survive, if you live from what the market offers you in terms of financial return, it's very important to be careful with the risk involved while trading the markets. And that's why I found very interesting the advanced pattern formations, to trade them, to identify them and to trade them, because they allows me to identify the potential price reversal inside the market using a very specific target, so that those patterns allows us also to identify the potential targets based on previous history. So we have targets for all those advanced patterns. That allows us, first of all, to identify the reward, and based on that we never enter the market to lose more than what we expect to win. So that said, that allows us also to identify our limits, and then the position sizing needs to be adjusted in order to get synced with your trading, your risk strategy to trade the markets for that specific position. So let's imagine we are trading this daily. This is a daily time frame pattern or daily time frame event. We expect the market to achieve the 38% retracement. This is the monthly support, which has been broken. This is also the previous, the weekly heads and shoulders that I shared before the creation of the reinforcement of this neck zone. So before the market reinforces this zone as a support and as a neck zone, I shared the possibility or the probability for the market to develop into these heads and shoulder formations. Then the market has violated the neck zone and it's now trading below. So below the neck, there's always some pressure zones. So we have one, we have two, we have a first, let's say a first zone of pressure below the neck. We have a second zone below the neck as a pressure zone. Retested the neck zone again. Retested the previous and most recent at that time, the most recent structure support, a bounce, rejecting to trade above the previous structure resistance. So the market still sprinting lower highs and lower lows. At this point, the market has reached this specific level and it has completed this crab pattern extended to the 160 on extension. And at this point, based on the pattern and based on the possibility for the market to bounce below the neck, retesting the neck again. So those are the expectations based on a completed formed pattern. So those are not expectations based on something that I'm expecting to happen above. Okay. I expect the market to react based on the formed or the completed pattern. So we have already a motive to try an engagement for a long on a DAX. Okay, so this is DAX on a daily time frame. Let's move to the next one. The next one, it's on a lower time frame. It's West Texas oil, so this is crude, and I want to we need to go into a lower time frame. So as we can see on a daily, on a weekly, this is a huge bearish momentum from the 76, I believe, 77 to the $50. So actually the market is rejecting to trade below that psychological $50 price level, but not before. The market has already developed a few setups below. I shared this bat pattern, this previous one printed at 88% retracement. I shared this one before the completion point, so we have here a completed bat pattern. It's 88% retracement, which has provided this massive bullish momentum, reaching the first and the second target, the 38 and the 618 retracement levels, and then with another bat pattern above, a bearish one. All that inside a period of consolidation, so a period of indefinition, a sideways process. So the market has developed two bat patterns, one bullish bat pattern, forming this support, so reinforcing this ascending trend line, an eventual ascending trend line, then reinforced later with those advanced patterns below. So this is the shark pattern at 161.8 extension. The market has failed at that level just by a few points, but that was expected. It was expected some potential or eventual bounce from this trend line. It was somehow expected. The market has failed at the specific criteria, the specific Fibonacci level to trigger the pattern has failed. But as we can see, the market as soon as the market approaches that level, reactions will be felt from there, and the market has reacted very well. Then, as I said before, or once we get this level, once the price reaches this level, I publish a chart saying, okay, after a period of joy and happiness, that should be followed by a momentum of fear and panic, and eventually that's what's happening at this point. So we have now all those guys who bought that market. Eventually they are jumping out, and the market, as a consequence, the market is starting to fall again. I will not be surprised to see a breakout of those lows on oil, but at this point, it's end definition, sideways process, and eventually it will finish my momentum in order to detect or to identify those patterns inside this range. So at this point, I have no expectations or no patterns. Better saying, I have no patterns for West Texas oil. At this moment, I need to wait for the price to develop, to define, to trade below or to trade above this structure, and then I will start to project those patterns above or below that same structure. But it's just one example of what we can find, what we can find inside a sideways process where everyone is waiting for a breakout of the previous resistance or the previous structure support. So we need the price to define, to get a clear, to define, or let's say to increase the probabilities to trade above or below those levels. You need to break those levels. But during that process of indefinition, and the market has moved sideways, it has developed into, let's say, one bullish bat pattern, a second bearish bat pattern, and then the market has developed other. So a total of 5 patterns, or of 4 patterns already inside this sideways process. So let's wait for the next trading week to identify the potential or the next ones on oil. This is gold, as we can see. Also trading an alt, I believe it's an alt bat pattern. Let me go into a 4-hour time frame. It's an alt bat pattern where I don't have that pattern on the lower time frame. Let me check this. So, but we are trading this bat pattern or alternate bat pattern at 113 extension. I need to be honest, I was not expecting I was not expecting gold to find that resistance. This is a previous, actually this is the weekly resistance. So this is its position at the highs, at the top of this week here, and the market has violated that level. I was expecting some strength or more strength above that resistance, but as we can see, as soon as the market reaches the 113 extension, and this is the default alternate bat pattern completion point, or it can be considered as the bat pattern completion point, the alt bat pattern. As soon as the market reaches that level, it has started to fall. So at this point, we have the 38% retracement as a minimum expectation for gold. For gold, a few points below the most recent low, so the most recent structure support. I will not be surprised to see gold pushing to that level. Previous structure resistance also. I will not be surprised to see that fall into those the price fall into those levels, and obviously if the pattern starts to work and starts to work very well, we have also the golden ratio, the 50% in the golden ratio as potential targets. We have this virtual for now trend line which may act as a support if the price decides to retest that line or that price zone. It can act as a support, and on a daily, or actually on a weekly time frame, we have this bullish shark pattern at 168 extension, or very, very, very close to that level, monthly support. I published it right below, as soon as the price touches this level, I published a chart saying, okay, the market is actually very, very close to the completion point for that shark. So at any point, we may expect a bounce, and the market has started to bounce, and it's now retesting the most recent and later printed structure resistance. So we are now breaking that level, or retesting, or threatening that level with the 200 moving average on a weekly time frame, with the 200 moving average right below, acting for now as potential support, which may force the price to develop or to keep trading higher. Obviously, a breakout of this structure, I will not be surprised. We have no divergence between those tops, the most recent tops. We have no divergence between them. That said, any fall should be or may be followed by another swing high, or eventually another one or two tops above, and those with bearish divergence between those. Until then, we need to wait, and we need to follow. We can follow we can follow gold during that process, and trying to understand the best opportunities to try to go long with that instrument, with gold. Very similar in terms of momentum, at least not the same pattern, but we have silver is trading, and it's not over yet. It seems like it's not over yet. It can be pushed into lower into lower prices. We have also, this is a 12-hour time frame chart. We are now trading right above the 200 moving average. We can check that on a daily time frame. And we can see on a daily time frame we are far away from that 200 moving average, which I will not be I will not ignore the possibility to retest that moving average. That's what I think it will happen next trading weeks. Let's wait and see the development of this bullish, the most recent bullish momentum on silver. I do expect at least the 23% retracement from all these bearish momentum, from those highs to those lows. We have this 23% retracement, and this is not even the minimum expectations for silver. So I expect, considering the Fibonacci levels, and if I need a minimum if I need to create a minimum expectations, considering the Fibonacci levels and considering that gold may be now in a process to bounce from those lows into a retracement, I need to consider the 38% retracement and not the 23%. But at those levels, at very close to the 23%, we have also the possibility for the market to develop, first of all, at 113 extension, the alternate bat pattern. If the market fails a reversal from here, when I say a reversal, the price starts to trade lower, eventually to retest the lows or trade even lower. If the market fails this Gartley pattern as a potential reversal, and if the market starts to trade above, we have the 113 extension as a potential alt-bat pattern above, and obviously the 160-180 extension will form the crab pattern, and very close to that level. So again, I can create huge expectations, but none of them worth a cent, because it will worth a cent if the market achieves that level. Until there, we have nothing. I can project a price here. I can tell you we have another pattern there. I can tell you another pattern 100 points above. I can tell you have another pattern here. It's completely irrelevant because the pattern is not printed yet. But since I expect the market to trade higher, and this is pure speculation, it worth nothing again, I can wait for the market to create those conditions to engage the market. Obviously, at those price levels, I expect the market to fall. Okay, I'm not expecting the market to keep trading higher from those levels. So obviously, we are talking about a potential trend reversal on silver. Okay, until there, I still believe there's room for silver to keep trading higher. Similar as gold, on that daily time frame chart, that daily pattern may be followed by in terms of momentum, may be followed by silver also. If gold starts to trade higher, and if injects, let's say, a powerful momentum on metals, obviously silver may follow that same momentum, and well, but that said, it's just what it is. We are now trading the Gartley pattern, bearish Gartley pattern territory, with the 200 moving average right below, and with targets positioned a few points below the most recent lows. So I will not be surprised to fill that criteria or those default targets, since the pattern is already working fine, so as we can see. Okay, this is silver. And after silver, Dixie. This is dollar index. This is a 12 hours time frame chart. I was expecting more bearish momentum on dollar index. The market has decided to retest that weekly support, so the previous structure highs, the previous resistance. We are now trading, not support, actually, the weekly resistance, exactly. We are now retesting that level eventually, and based on the most recent price and candle, we may have also a double top eventually. The shape is not the best. We have no V shape, a clear V shape, so there's some noise inside between those two tops. But it can happen. It can develop into a double top, a technical double top. The market is now retesting the close price, and let me push this horizontal ray, and let me use magnet. If I put a trend line here, let's change this color. We can see the market has retested already that level. So the market is rejecting to trade above those close prices. So we have this bullish candle here, close price, start to trading lower, and now the market finally is retesting that line, that price level. So if the market rejects to trade above this price, I believe there's a possibility to develop into a double top. We have a broken, not a broken, but we have a neck to break here. We have also our break, our neck zone. So this will form a range between the previous support and the most recent or the previous resistance. Retesting the highs, rejecting to trade above, it will force the price to start to fall, breaking the previous support area, the previous support zone below 96.90, 96.87, 96.89, 96.87, previous structure support level. Breaking this level, I admit a threat to the previous structure support as a neck zone, and if the market breaks this neck zone, I believe it can produce, and for those who are trading breakouts, I believe it can produce some interesting price motives, or one motive at least, to try a short below the neck zone. And below the neck zone I have my next pressure zone. Okay, if the market decides to break this previous structure support, where the market may find some pressure, where it may produce something interesting to trade based on the risk reward that we have. If the market decides to trade at those levels, and this is pure speculation because we never know if the market will achieve those levels, but if the market, and I'm not here to provide or to share with you, again, as I said before, specific trade setups, take notes, this is just educational content, okay? If the market decides to trade the 88% retracement, we have a default target, the 38% retracement. So if the market decides to trade the 88% retracement from this swing, it will print me the bullish bat pattern. If the market prints me the bullish bat pattern, we have previous history saying, okay, usually if there's a bat pattern, if the bat pattern starts to work, they tend to search for a retracement level, a Fibonacci retracement level, which is the 38% retracement, and eventually the 6-to-1/8, the golden ratio, which is positioned at daily support, okay, the previous or the most recent daily support. So if the market decides to produce this bat, we have a default target. So if I have a default target which is offering me, or which may offer me 132 points above my entry, obviously I don't want to engage the market to lose more than what I expect to win. So if I expect to win 132 points, 1.40% on price, I will not engage the market to lose more than what I expect to win. So I know already where the market will invalidate the pattern. So this is the bat pattern at 88% retracement. So that said, breaking those lows, you have no bat pattern anymore. So we don't need to remain inside this position for too long. So we can try, and we should, and that's what I do, we can try to minimize our longs or our losses and eventually even a few points above. That will depend the risk you want to apply and the position size that you want to trade the market. You can try to play. We can try to get a friendly risk, the best possible friendly risk reward approach to trade that pattern, because if the market decides to fail that level, usually we'll break that level and trade below. But obviously we need to provide some room below those lows, first of all, because a lot of people have their stops right below that low, a few points, 5 points, 10 points, right below that low. And it's not difficult to hunt all those stops, even trying to respect the structure, providing some room to the price to breathe if necessary, creating a situation where that allows us to engage the market using a friendly risk reward for us. Nothing assures us they will not hunt you and then pull back right immediately. As soon as I kick you out from the market will decide to bounce. It has happened to me a lot of times. It will happen more times for sure, and that's where the market actually. I don't want to use the expression ungrateful, because the market is not ungrateful if you are disciplined, but that's where the market sucks. I'm sorry the expression, but that's where the market sucks, because if even respecting the structure and even creating some disciplined criteria and even following those criteria over and over again, the market sometimes will kick you right at the point where you have decided to adjust your stops. And as soon as I enter my positions, I don't move my stops anymore. I don't start to increase my stops because the price is coming against me. Who assures me that I move my stops and the market will not kick me out? And I keep doing that over and over again, and I end up with a trade that worth nothing, because if the market decides to correct from those lows to the 38% retracement, the market will correct to my break-even point, and I win nothing from this trade. No? So it's important to keep respecting the structure. So we have previous structure support. It's important to provide some room below those levels in order to if they need to print lows below that previous support and then to bounce, we need to respect that. So, and I suggest to provide some more room below those lows. And even though sometimes they will hunt you, and it will not be possible to take advantage from some of those events, but it's important to repeat that process over and over again, because most of the times the market will not kick you out if you respect the structure. If the market needs to respect the structure, if the price needs to remain above this structure support, and we are talking about a specific price, if the market needs to remain above the 93.82, the market will respect that level and will not break that level. So we need to respect that, and if we respect that and create a rule or a list of rules to respect every day on every engagement with the market, I believe and I can assure you that we will succeed over time. It's a long-term journey. Trading is a long-term journey for those who live from the markets. Okay, if you gamble with the market, you may have the luck, which provides you a very, very, very profitable position. But trading for living with the markets is not so linear as engaging the market, making a fortune, and doing the same the next day. So it's not so easy or so linear as you may think. So it requires a lot of time to develop a process of understanding, embracing, and define criterias and rules to engage the market based on your personality, the time available, your knowledge, your everything, all the tools that you have at your disposal. You need to have full control of the tools in order to study and to learn and to develop a strategy to trade the markets. So, moving on, this is Dixie. There's a probability, obviously, to trade above this weekly resistance. I will not be surprised to see Dixie and dollar index trading higher. So there's a strong sentiment about possible bullish momentum. But let's wait and see. At this point, I have nothing more to say about this Dixie. Obviously, those who are trading structure breakouts, we can expect the breakout of the structure and try to take advantage from a potential short below that structure. For those who are trading long and those who want to trade long, the market is now breaking those highs, so I need the market to remain above and to trade above the weekly resistance. What I need actually is the market to remain and to create something inside a specific range, but above the weekly resistance. Okay, I need a consolidation process. I need a sideways process, a consolidation above the weekly resistance in order to increase probabilities to see the price trading higher. But I need something above the weekly resistance that allows me to identify a potential pattern that will project the price above. Until there, I need to wait, at least based on what we have here on a daily time frame. Dixie. Let's move on. This is pound versus New Zealand. This, I believe it's a 4 hours time frame that I want to show you. Another example of, I believe I published this one. I'm not sure if I have this chart on Twitter, but I have, if I have not, I will publish it. I will publish it later. But this is also the one bearish scenario, so one bearish motive to engage the market. Cable versus New Zealand has printed a sharp pattern at 168 extension, 200 moving average right above, as a pressure zone, as a potential resistance, and the market has fallen and with default targets positioned between the 38-50% retracement. I'm not sure if they are done already. We have already, the market is now feeling some pressure above the previous structural resistance, so I will not be surprised to see the market recovering from those levels. But again, the pattern has been printed, default targets positioned with a minimum 38% retracement. This is what I expect, at least for the next hours of trading, in the next candles on pound versus New Zealand. This may also develop into, and we need to wait for that development. It may end forming also a potential heads and shoulders. We need to validate that. We need it requires the right shoulder to form. It requires one eventual reinforcement of this zone as a potential support level, so we need a price to reinforce this level as an horizontal support, and the price can print an ascending, let's say, ascending support line as a next zone also. But based on the most common or at least the one that will be more familiar for our highs, it's an horizontal support that needs to be reinforced at the previous one. So this is the previous support area, support zone, previous resistance. A reinforcement of that level will suggest one eventual right shoulder to be formed or to be followed, or to be printed after the neck reinforcement. So it requires the formation of the right shoulder, which may also produce then a new swing retesting the low. So let's stay tuned at least 183.85. So this is a level where I can see the development or reinforcement of the support. Let's wait and see. Again, do not ignore the possibility for the market to bounce from this previous support, this previous resistance, the eventual left shoulder area or price zone. Do not get surprised with a retest of those highs. But again, and always, a pattern is printed with default targets at that level. So for those who are trading those levels, I will leave you a wait for those levels to be reached. You can also use partitioning during that process, partitioning your position, pocket some of the profits, closing some of the units that you are trading, closing a portion of that position and remain with the other portion. Instead, this is a 2-hour same frame chart, and this is the shark pattern at 224 extension for cable versus New Zealand. We have also this euro versus New Zealand. Let me change this into a 4-hour time frame. The market has failed the completion point for this Gartley pattern that I was expecting to form just a few points above, and it's now trading the previous structural resistance area. So the market has found support above the 38% retracement at this point. So the market failed the completion point, but it has started to fall from there. So the market is now trading the previous structural resistance. It's now potential support. It's also the previous monthly support area, which is I believe these lows from June. This is also the monthly support area. So the market has rejected to remain below, and we are now threatening or retesting that level again, which may suggest more or at least one more swing high. Print new highs or not, we don't know. We have nice bearish divergence, and eventually that will may not happen, and a fall from those lows may happen eventually. So we have bearish divergence between the head and this eventual head formation there, with the most recent highs, the most recent top. But we have already the strength. This is the relative strength index. So we have now a very strong bearish momentum. Let's wait and see. Let's observe, and we talk about the consequences later. At this point, I was expecting somehow a bullish hidden divergence, which is not the case for now. So for now, we have both the indicators and those lows synced. Somehow, if the RSI breaks these lows without the price breaking these lows, okay, if the price remain above these lows and RSI breaks those lows, I will expect a bounce without breaking those lows. If the price breaks those lows, synced with RSI, I will see oversold conditions and the market retesting those lows, breaking the previous ones, and eventually searching for this daily support. And if that happens, it may produce some interesting, strong bearish candles, searching for those levels of previous support if the market is already on oversold conditions. For that, we need to wait and to see. So at this moment, we have bearish divergence between those highs, and the market is now retesting this trend line in the previous structural resistance. There's suggestions for more bearish trend continuation, breaking those lows here. The market is right now retesting that level. Okay. Well, that said, let's move on. Wait, and you will see. This is Euro versus New Zealand also. The next one that I want to show you is Euro versus Australian dollar. I believe this is a daily time frame. The market has gapped and disrespected some of the criteria that I was trying to follow at that point. So before the close price of that week on last Friday, and because the market then later opened with this huge gap and filled later, but at this point I was expecting the 113 extension to act as a potential support. The market has gap, recovered above, so I still believe there's a potential based on this on the psychological behavior behind those patterns and behind a false breakout. That's what I think this is. This is a false breakout of the previous structural lows. After a false breakout, and if the market decides to trade above the previous structural resistance, which is not the case, the market is rejecting to trade above the resistance. But if the market trades above this resistance, we have this bearish shark territory between the 160-18 extension, which is synced with the previous structural support level, the weekly support. And if the market decides to retest those highs, we have the 224 extension also very close to the monthly and the weekly resistance, which is nothing more than those highs. So note that this level is also the next zone for this double top, which guide us into another process of identifying the golden ratio and wait for the 618 retracement as a potential 2618 trade setup. So at this point, at the golden ratio, the market will print the 2618. It's a double top validated with the broken neck, support below the neck, and the pullback to the golden ratio, to the 618, the golden ratio. So this is the weekly support, the neck, again, retesting the neck, golden ratio suggests a major movement projected from the golden ratio, and this can be massive for euro versus this can be massive for euro versus Australian dollar. Okay, this will put the price at 1.5, 1.49. This can be truly massively again, and it will break all those supports, the 4 hours, the most recent one, the daily and the monthly support, obviously. But again, this is just one suggestion. We don't know if the market will decide to print that movement. The price will print a specific pattern, which is the 2618 at the golden ratio. A few points above, we have also the 168 extension from this very last swing low projected above, synced with the neck, previous structural support, golden ratio a few points below. So we have kind of confluence box, we have a cluster box, let's call it a cluster box, between the neck zone at confluence with the 168 extension, the support, the weekly support, which is the same level, and the golden ratio. So we have three factors or three elements there. So we have the completion point for the shark, synced with the neck, and the golden ratio position a few points below. Nothing of that, and again, nothing of that worth a penny if the market fails to print it. So we need to wait, to validate, to check market conditions, and if you have market conditions to engage the market, you can try to create a situation to take advantage from. Obviously, the one that will offer you the better or the friendly risk-reward approach is trading a 224 extension, which will also increase the probability to break above. We need to be aware of that, but it will create a friendly risk reward because we just need to respect those highs to set our stops above with targets below. So we need to respect the risk strategy to trade that pattern, positioning our stop losses above those highs as our limits. If the market decides to trade higher, you lose a few points for the market. If the market decides to trade in your favor, you will maximize your profits for sure in a few levels below, between the 38, the 50% retracement, and the golden ratio, the 60-1-8 retracement. So this is my view for euro versus Australian dollar, which may fail based on this pressure from the 200 moving average above. It may act also as a resistance, failing to recover above. We have also this previous and huge consolidation period here, moving sideways. This is a daily time frame chart. This is the price moving sideways during a huge and long process at that same price level. So I will not be surprised if euro versus Australian dollar starts to enters into another sideways process, massively ignoring all those expectations to trade above or higher, or to trade above or below, sorry, and spending a lot of time developing something similar as previously. But again, we expect. I don't expect the market to trade higher or lower. I expect a trade. I just try to identify the patterns close to the price level, to the recent price, where we are now, and where the price may be in the next sessions. This is a daily time frame. Obviously, it will take more time to develop and to achieve those levels. But what I try to do is to identify the next one. Where is the next pattern? Where the market may find some support or some resistance? What kind of pressure the market will suffer there? Look left and try to get information from what the price has done previously on that zone, on that price zone. And based on the Fibonacci ratios and those harmonics, you can try to identify previous structural resistance, support, and resistance levels, and try to get synced with those levels and create a situation with a friendly risk reward to trade the market. So move on into another one. This is euro versus Australian dollar. At this point, nothing specifically, retesting that daily resistance. Euro versus pounds, I was expecting, as soon as the market approaches that level, I was expecting the creation or the formation of this sharp pattern at 1/6 extension, but obviously the market has decided to respect the monthly resistance above. But again, we are trading the previous structure resistance, so it may act as a support level. And we need, the pattern has failed above, the pattern has actually retraced into the 88% retracement, a few points above and then fall. Nothing specific here. I can imagine a breakout of this monthly support on euro versus cable, on euro versus pound, and this is where we are trading now. 200 moving average still positioned below the price. This is daily time frame chart, so this is acting as a support level. At the same time, I will not ignore the possibility to break the weekly resistance, searching for that 200 moving average. But again, I have no motive to engage the market on any direction, bullish or bearish. At this point, I have no motive. I can, at this point, at those highs, as soon as I published this chart, I was like, well, the price may fail to achieve that level, especially if you start to see the market reversing at that point, and then the market has developed into this bearish daily candle covering that previous one, an engulfing bearish candle. And well, it may produce more bearish momentum, but again, I have no motive from this price level to trade. From here, eventually, even without the price, without forming the pattern, retesting those highs, 88% retracement fall, we start to see the market falling from there. Well, we can try to create something from there, but not at this price level. At this price level, you need to wait. Eventually, the market will bounce, print a new high above this previous one. If at divergence, we can try an engagement there, we can try to find a motive to try a bearish momentum there. Until there, we need to wait. Nothing more to say. This is pure technical. I don't mix any type of fundamental approaches here on my trading strategy. Obviously, we should have a notion what is happening, especially when related to pound. Trading the pound is always tricky. We have those Brexit events, no agreements with Theresa May, and all those politicians arguing ones against the others, and sometimes it makes no sense the price reaction to those events. So I prefer to stay away and to leave those comments to those expertise people that tends to do that. And I believe you are aware that there are a lot of people with very, very useful information to trade the fundamentals or to get notions about the fundamentals behind the markets. But I prefer to stay focused on the technicals and try, because actually ultimately you will use a technical approach to engage the market, even with all the motives around you, social stigma or social sentiment. You have all the TV stations, you have all the reports, you have all the news, you have an expert guy telling you that there's politicians are arguing in a specific direction, and the market will fail you. And ultimately, even if the market will not fail you, you will need a technical moment. You will need a technical price to enter the market, and that will require a chart, ultimately a chart, and it requires one study, and it will require a price, let's say a motive, a technical motive to engage in the direction of your fundamental initial thoughts or approaches. So that said, I stay with technicals, and until today I have nothing to complain, not ignoring, but not engaging the markets based on what I listen in the TV or the reports or other fundamental traders indeed. So moving on, Canadian dollar versus Japanese yen. I published this shark pattern at 224 extension. The market has actually reacted very, very well, achieving the default target at 50% retracement. Also, the 5-0 sequence, okay, the 5-0 sequence and the 5-0 pattern, which has produced a nice movement from there. So we expect the market to react against the most recent momentum at the 50% retracement, so completing the 5-0 sequence. And the 5-0 is also part of the shark pattern. Usually the shark pattern will target the 50% retracement as by default, and that will print the 5-0, which may produce a counter trend momentum. So the most recent, not trend, but the most recent momentum, and it should be followed by a counter momentum. No, if then the market will start to trade higher or lower, we never know. But the sequence it completes at 50% retracement, and then we have and that it should be followed by that momentum, in this case bearish momentum. So at this point we are trading between that. Actually, the market is rejecting again that weekly support, which is positioned here from 26 October. so we are threatening that weekly support at this point. So above that level, we have a bearish pattern at 88% retracement by default. It's a simple pattern, as you can see. It's always the same. We expect the market this W shape or M shape if you are trading the bullish one. But the bearish pattern, the W shape, expected at 88% retracement, which should target the 38% retracement from all this bullish momentum. If the market decides to print that pattern, usually by default we'll trade the 38% retracement. Until there, we need to wait. We have no divergence between those most recent highs. But again, let's wait and see. There's also room to trade below, but I have no motive at this point to engage the market, to trade lower or to trade higher. I need to wait for the market to develop into something else based on this time frame. So this is a 4 hours time frame. I have another pattern on a daily time frame below, but for that to happen, obviously we need to wait for the breakout of that daily support, which is positioned at 83.66, and well, we need to trade below. We need to break that level, and we need to find support at those levels. 127 extension. This is the butterfly pattern, or let's say one eventual butterfly pattern, and based on the price momentum, it should be completed below the most recent price. It's not possible to complete that pattern today unless the market falls from there, which is not probable, but it will require some time to be printed. But this is the default bullish butterfly pattern at 127 extension. We need to wait for the development of that pattern, if that is the objective, to trade lower. But again, we need to break those support, those daily support levels, and eventually the market will end up forming some type of formation to engage the market in that direction. We never know, but it's possible to try to search for, let's say, a 2 hours or 1 hour time frame or 4 hours time frame event in order to try an engagement below. But we need the price to develop into something from there. So this is CAD versus yen, and now let's enter a few other yen pairs, very, very interesting ones. And let's start with New Zealand versus yen, which is now bouncing from the 127 extension, from the Gartley pattern completion point, but not before completing all those previous ones. Amazing price action. Sometimes it happens, the market produces 2 or 3 or 4 patterns in a row that allows you to identify the market and to drive the market based on those patterns. So this is the bearish shark pattern at 224 extension. The market has nailed the 224 extension. It has printed this bearish momentum, followed by the bearish shark pattern. Actually, the market here, the market has printed the 1618 extension, the shark pattern again. It has developed later these heads and shoulder formation, and now the Gartley pattern. So I started to follow. Actually, I'm following this one from below. So I took this a portion of this trade here, because the market then decides to print a new high. I took a portion of this trade. The market then later decides to print this shark pattern. And during this process, this sideways process, this is something like 400 or 500 points trading all those swings. So we have one first bearish shark pattern at 224 extension. From here, the market then has developed into this bearish shark pattern, minor or a lower degree one, printed with this daily resistance at the head. And then the market has synced into this Gartley pattern, not before printing also even lower degree shark pattern also here. Let me try to show you the 1618 extension right there. the market has been pushed a few points below the 1618 extension, but we can see this 1618 extension acting as a support trend line, eventual trend line. At this point, I shared the chart saying, okay, eventually a right shoulder will be formed above. And the market has actually nailed my right shoulder expectations and forecast, and from there the market has started to fall. So just based on the patterns the market tends to print, this is not based on any type of indicators of this is pure price action and pure Fibonacci levels and pure harmonics, nothing more. You have an edge and shoulder formed, which suggests a bearish breakout of the neck. Below the neck zone, we have this bullish Gartley now, which suggests at least a 38% retracement, eventually to retest this broken level. This is a broken support. It may act as a resistance now. So let's not ignore the possibility for a retest of this previous support or the 4-hour support level. Retesting that level, it's this level, this week here, these lows, retesting that level and then new lows, or breaking above, resuming above, and forming a different pattern. Eventually, the market can reinforce this descending structure eventually. Okay, let's stay tuned on those possibilities. Do not ignore anything. Do not ignore any possibilities, so we need to be aware of those possibilities. So at this point we have this bullish Gartley on New Zealand versus yen. We had also this was a new Australian dollar also versus yen. I published the possibility or the probability to develop the right to print the right shoulder. So this is kind of a 12 hours time frame chart. I published the chart once I saw the price reinforcing this level above the 200 moving average for the first time here. I saw the potential for a development of the head and shoulder. I prefer horizontal necks, and as we can see here, the market has later developed into that horizontal neck, and from here the price has bounced and printed the right shoulder. I have all those charts before those shoulders being printed, and it's now again reinforcing this support level. If the market breaks this level, there's a massive short. Massive. This is a 12 hours time frame chart, but it's a very interesting eventual bearish momentum with default projections very close to the previous lows, to the monthly and the weekly support level. But again, we have also this potential or eventual bullish shark pattern at reversal. This is also considered as a reversal extension Fibonacci level, the 1618 extension. It may act as a potential support, as a reversal. If the price decides to fall, it may produce some pressure there to force the price to retest the previous structure above. But again, we need to validate this breakout. We need to wait for the breakout of this level, this neck zone. For now, we have the right shoulder formed and the pattern kind of edge and shoulder printed there. So and not a kind of, actually it's a pure edge and shoulder formation, which suggests bearish trend momentum or bearish trend continuation. Okay, actually in the direction of the major trend. Okay, in the direction of the major trend. Eventually we will see Aussie versus or Australian dollar versus yen trading even lower. But again, we are trading above this descending trend line, and that's why we need a breakout of the neck. We have this bearish or descending trend line as resistance. It is now support level. So and synced with the neck zone for the edge and shoulder. What we have is an edge and shoulder formed above the previous structure trend line resistance. Okay, it's now a support level. So breaking this level suggests a retest to the previous monthly or weekly support eventually, but above that level we have the reversal Fibonacci levels, the 78% retracement, the gold and the 1618 extension as potential at 79.50 as potential reversal price level. From those levels we should search for conditions or for potential reversal candlestick formations or eventually lower time frame events that allows you to identify a potential pattern to trade above, to trade a breakout, or to trade something. No, if that is your objective. Those that are those more aggressive traders, eventually they will trigger the position as soon as the market reaches those levels. And as always, you need to respect the structure. You have the previous structure support to be respected. You need to position your stops below those levels. If the market decides to trade below, it will invalidate the pattern. It will increase the probabilities to trade even lower, and you don't need to remain inside that position, suffering and bleeding and slowly bleeding your account and burning your account slowly. I believe it makes no sense. So Aussie versus yen, 79.50 is my level for the next pressure level for eventual support. What we have more? This was a very good one. This was a 2 hours time frame chart. We are trading below this previous major support level. And as we can see, the market has printed the default bat pattern. Actually, I believe I can show you this in 1 hour time frame to get a clear picture of that price action. So the market has printed the 88% retracement bat pattern, the bearish bat pattern. The market has retested the previous structure resistance level, bounced, retested the highs again. Actually, the market has retested this level at 88% retracement at least three times on a 1 hour time frame chart, and then the market has massively produced this short opportunity, which we are now positioned inside, and with break even. It's a break even trade. I have my second targets positioned at golden ratio with special attention to this structure. At this point, I can see the market retesting this weekly support, but if the market decides to trade higher, we need to close our positions or to keep partitioning the position, but there's a possibility for a bounce at the 50% retracement at this point, synced with this previous structure resistance there. So we are threatening these levels or those levels, weekly support. But again, it's just another example on how Fibonacci levels may help you to identify those reversals based on a simple 3 waves swings. So we have 1, 2, 3 swings that allows you to identify a pattern above, and if the market decides to print that pattern as a 4th swing, as a point D formation, so X, A, B, C, and a D. So you only need the first 3 swings to try to forecast a pattern. You just need 1, 2, and the third one, that from here we can try to identify the pattern above at 88% retracement. Actually, I believe I shared that pattern before the completion point. But obviously it makes sense to start to prepare your position only if the price breaks the previous structure pressure zone or resistance in this case. So as soon as the price violates this resistance, where the price may find some pressure and where the price will complete the next advanced pattern formation. It's 88% retracement based on the criteria and the Fibonacci ratios between those swings. We can try to identify the bat pattern at 88% retracement. It's what the market has done, and it's now trading the 50% retracement. So this was cable versus Japanese yen. Also another interesting short position. Very similar to that one, we have euro versus yen, which I am positioned for a long-term position, let's say on a daily time frame or a 2 days time frame chart. I have a double top and I have a 26.18 in place, so we never know if the market will produce that massive opportunity or not. But at this point, what we had during last session actually, and today overnight session, has produced this bearish pattern, very similar to the one on pound versus yen. 88% retracement. We are now trading the previous structure support. I can try to identify the levels below this support, the levels below to find the support or to find some pressure. We can try to, well, the 168 extension below, if the price decides to break these previous structure support levels, right below the previous daily support, we have this shark pattern at 168 extension. It's a possibility below and above. In fact, I don't have, based on the most recent Fibonacci ratios and swings inside the market, most recently I have no patterns above, just this one, this eventual shark pattern, which may extend to the 224 extension below. Obviously, those are the two levels of pressure to print the shark pattern. 168 extension. If the market fails, the 168 extension tends to search for the 224 or eventually a few points below. But this is the next pressure zone where I will try to identify the next, actually this is the next pattern below the daily support, immediately below. Euro versus yen, this is a 4 hours time frame, and obviously it will produce it may produce some relief, retesting the lows, the previous support, or eventually a few points above, retesting the most recent structure support above in the most recent price level at this point. Dollar versus yen. Dollar versus yen, threatening again for the third time this trend line, this descending trend line. So you have a first one, you have a second one, and this third one I was expecting, okay, eventually it will print another bat pattern above. I'm already positioned also on an higher time frame chart. I'm already positioned on dollar versus yen on a bearish mode, with a bearish position, which I don't know if the market will actually trade in my direction at this point, but the trade's still alive. That actually my trade will invalidate if we start to trade above these highs. That's where I put my stops, right above those highs. I will not ignore the possibility for the market movers to hunt all those tops above, which I'm included at this point, because I engaged at a daily time frame chart a few points below, and I was forced to not forced, but I decided to not provide a lot of room above those highs, because I believe if the market decides to break those highs, it will search for the top of this ascending channel eventually, and I don't need to remain inside this huge period of time. I don't need to remain inside this position against me. So at this point I have my stops positioned above these 3 drives, or eventually 3 drives. At least I was expecting that to act as a 3 drives pattern. The market actually has produced some interesting price momentum there, but I was expecting the price to break this ascending structure, which may happen. The price still respecting the previous structure highs, and until there's nothing to fear. So if the market then decides to kick me out from this position, I will try another one later. At this point, we have this potential also on a lower scale, on a lower degree, a potential 3 drives pattern, which can retest the lows of the pattern, so that the first swing low of the pattern. So let's say the pattern will retrace 100%. That's usually what the 3 drives pattern will print us. So I will not be surprised to see that pattern, dollar versus yen, retesting again those lows. And obviously, if I'm expecting to trade lower, I will be lying to you if I'm not expecting to see my position going in my direction based on the time frame and the pattern that I have on that specific time frame. I still believe that it's possible until the market proves me that I was wrong and kicks me out from the market. This is dollar versus yen, 4 hours time frame charts. Another one that I'm following, it's dollar versus Mexican peso. We have also another bearish pattern here, which has produced this nice and interesting price behavior. Then the price, but it has failed as potential reversal, and then the price has printed this double top. This is a technical double top, and the market has reinforced again this next zone as a potential support, and it is now again a support. And as soon as I saw the market starting to bounce from here, I shared the idea that it's possible to see a bounce to the golden ratio, to those levels. To those levels, retesting those highs, or trying to approach those highs at this point, and eventually from there we will see. But we can project an ABCD pattern, a symmetrical ABCD pattern from here, which needs to be adjusted now at this point. But an ABCD pattern projected from the 160-180 extension, obviously, it's a perfect synchronization with the potential or with the eventual BAT pattern at 88% retracement. But again, we need to adjust, and that's what the market has printed. So we need to adjust for what the market has done, and based on that, a symmetrical behavior will put the price right above the 78% retracement, and then obviously the formation of the pattern a few points above, ignoring a symmetrical behavior, pushing a few points below weekly resistance, also there, which is those highs. So these highs from September 5, and well, that's what I need to wait for. So we have this eventual double top. We have a neck zone. It requires a broken neck in order to validate as a potential trend reversal. Okay, the market is trading higher. A double top validated with a broken neck suggests a trend reversal behavior. Okay, we never know if that will happen or not, but that suggests a trend reversal as a potential reversal pattern. So we need to wait for that validation point. That will not invalidate the possibility for the market to print this bullish BAT pattern. Okay, retesting that neck zone. I not measure that. Let me measure that retracement. Let's see what type of retracement we have at the next zone. Well, the 38%, the minimum expectation, the 38% retracement. I will not ignore a retest of these levels, previous structure support or close to those levels. But as soon as the market approaches these levels, we consider this as a retest of previous structure support. And again, a BAT pattern, it may also put some pressure inside the market and violate again, or recovering above the broken neck, and eventually forge something different than the most or the default expectations below a broken neck for a double bottom or a double top. So we have a double top, we expect a trend reversal, but the BAT pattern can also put some pressure and force the price to trade higher. We never know about that. But important is to identify those pressure levels, which will allow you to engage the market with friendly risk reward approaches. Dollar versus CAD, what we have here, also trading, in my point of view, a bearish territory. So this is a bearish, this is the bearish crab pattern, actually the bearish shark pattern territory. The market has almost nailed that Fibonacci level at 224 extension, not for one time, actually one and a second time. And at the second time I was expecting now they will print the shark pattern, and they failed again, and we are now trading this bearish eventual inside one bearish eventual descending structure information under formation. So we are now forming one eventual descending structure that we need to wait and to wait and to validate and to try to understand what the price is trying to print from there. But we are trading what I consider as a bearish territory for sure. So we are approaching that level, the 224 extension. I will not be surprised to see CAD trading lower from here. Okay. What we have more, dollar versus CHF. Obviously, there's always a possibility to be wrong and for the market to trade against me. That is my expectation for CAD to trade lower, but it can fail. It will depend on oil. We had crude oil also trading in a bullish momentum recently, as I showed you before. So there's also room for CAD to produce something from there. Dollar versus CHF, it's trading now at the 224 extension from the previous swing. So again, it's a shark pattern. It's another shark pattern. We can try to identify that pattern with these new lows, with a new low below the previous one as kind of okay. It will break, but after all. It acts as a false breakout. No, a double bottom, a bottom below the previous one, false breakout, extended then later to the 224 extension. It's a shark pattern. Usually the shark will produce a 50% retracement, which should be followed by another bullish momentum. Okay. If the pattern will produce that or not, we never know. The pattern is printed and the price is reacting well from there. For the third, it's a third candle on a 60 minutes time frame. It's the third candle rejecting that level. It has produced this massive bearish momentum here in a 1 hour time frame chart. So at this point, I still believe there's a possibility to fill the default target for the pattern, which is positioned at a few points above, adjusted to the price. I will not ignore that possibility for dollar versus CHF. I have also published on a daily, I believe, or a 12 hours time frame chart. We have also one bearish eventual a bearish trade setup there. Actually, it's a daily time frame. Let me check this. Exactly. Let me just extend this above. This is the one extended to 224 extension. This is the one at targets. At least a minimum expectation has been reached, the 38% retracement. Note that we are talking about something like this. Another bearish shark pattern. This trading at 38% retracement, but then later actually it's not a daily time frame. I need to check that published chart. I believe it's a 4 hours time frame chart. or I'm confusing this one. No, it's not this one. For dollar CHF, we have this bearish, as I showed you before, this bearish shark pattern at 224 extension on a lower time frame chart. But don't ignore the possibility to develop a kind of cup and handle formation. So what I mean is retesting this 200 moving average above, a few points above, retesting those highs, and then a relief, eventually the 38% retracement, and then new highs again. Or when I say new highs again and I extend my arrows to those levels, I'm not saying the price will reach those levels, I'm just saying the price usually trades above this neck zone, this resistance, the neck, the cup and handle resistance level. So, but don't ignore the possibility to see CHF trading higher. But that will depend, obviously, dollar index. Other dollar-related pairs may also influence this pair to trade or to follow the bearish strength or the bullish strength on dollars. So that will depend on dollar index and other instruments also. But based on a technical perspective, we have the development of this potential cup and handle formation for dollar versus CHF, beside the fact that we are now trading this lower degree 1 hour or 2 hours time frame chart bearish shark pattern, which may also produce some interesting relief for those trading on lower time frames. Broken structure, this bearish momentum is broken, so which may suggest also some bullish momentum. This is Kiwi, and Kiwi has produced, let me just check this, okay. This head and shoulder formation, this lower degree or minor or internal edge and shoulder at the top, so we have this pattern printed above with the neck zone a few points below, and the market has decided to violate all these structures. So I published also that possibility to develop the right shoulder and then to fall below these levels, and the market has found then later support a few points above the completion point for this cipher pattern at 78% retracement. It's not so usual to see, not so harmonic in fact, but in terms of Fibonacci ratios, those are the levels. That's the level where the pattern will complete the 78% retracement, which I believe will fail, because if the market decides to bounce from this level to retest the structure, I will not expect then later the formation of this cipher. The market will usually or will trade higher or will break those levels. Weekly resistance below. Note that this is also a potential neck zone to develop a major edge and shoulders pattern. So eventually the market will now retest those highs in order to print this right shoulder, and then later we'll break below this neck zone, and this is the projection. This is the projection for the breakout. So it's a movement similar from the head to the neck, projected below the neck. So we need to wait for the breakout. So if the market decides to break those levels, we have a default projection for the price, but it requires, at this point, the formation of this right shoulder. More. And do not ignore a bounce from these levels. Breaking previous support and resistance levels will increase probabilities to trade even higher. This is Aussie versus Yen, also published. I published the idea for the market to develop or to create the right shoulder above at the golden ratio, because we have the highs of the left shoulder positioned there. It was a nice reversal with this pattern printed at 224 extension. So at some point I was expecting, as soon as the market starts to bounce from here, I was expecting, okay, the market eventually will force these levels above. The market has failed that level, but it has created the left shoulder below, and it has broken. You have now a broken neck being tested at this point. At this exactly moment we are retesting the next zone. I will not ignore the possibility to trade even higher, rejecting the idea to fill the default criteria or the default projections below the heads and shoulders. Below we have also this eventual shark pattern at 70-78, so this is the level where the shark pattern will complete. We never know if the pattern will complete that level, will reach that level or not, but if that happens, we already know that we are trading a bullish shark pattern. But at this point I can see the market recovering above this next zone, the 200 moving average also pointing or starting to change the largest momentum as a bearish momentum. We have now the 200 moving average also starting to change the scope into a bullish momentum. I will not ignore the possibility to trade higher with Aussie, but again, I trade technicals, I trade based on specific patterns. What we have here is a bullish shark pattern below, or eventually if the price decides to bounce from this level, we can start to identify the next pressure levels above, and I will push the 168 extension as my first level. As we can see, just as an example, my previous golden ratio, the 618 retracement, as we need to adjust that level. We have the golden ratio position at confluence, or kind of confluence, or very close to the 168 extension, which may produce some different some bearish shark pattern. Again, another bearish shark pattern at 1618 extension, retesting retesting the highs, and eventually retesting the highs of that eventual right shoulder, and eventually we are now forming the next zone. Okay, eventually we are now forming the next zone. At this point, actually, we have no horizontal next zone. There's no horizontal next, so we have this. You have to open your mind to the possibility to reinforce this level as a support, to retest this 1618 extension, the golden ratio, as a potential right shoulder, to form the right shoulder. As we can see here, the market has also produced some, let's call it a zigzag here. So I will not be surprised to see that bounce from those levels and to print the right shoulder, and then a new fall should be followed from there. But again, we never know about that. I prefer to stay focused on those harmonics once they get completed. And at this point, we have this bearish shark pattern at the golden ratio, or below this structure we have the bullish shark pattern at 1618 extension. So those are the two levels where I believe the market should suffer from pressure from bears above and from bulls below, which is Aussie. And this is previously it was Aussie versus dollar, exactly, and this is euro versus dollar. And as we can see here, I was expecting the breakout of this structure. At some point I projected this harmonic below. The market has failed, as we can see, has failed to achieve those levels, respecting these lows, the previous structure support. It's a possibility to see the market retesting those lows. Again, this is the weekly support. Monthly support, we are now again threatening that level as resistance. Trading above suggests a retest of the previous structure support and resistance levels. Okay. But again, I will not, I have no motive from here to trade the market at this point. 4 hours time frame chart, we have no motives to trade from here. We need to wait for the market to develop into something else. On euro versus dollar, I believe I will finish with cable. And cable is also trading a very interesting price level. It has retested the previous monthly support after breaking that level. So the market has violated the previous structural support, the monthly support. It has retested that level as a resistance, so it's now a resistance level. We have also the most recent structural support levels below the 4 hours and the 1 hour time frame. We need to adjust those levels, but we have structural supports below. And the completion point for the next pattern, the ones more close to the price at this moment, at position at 124 and 122.66. So this is the two levels. If you want a range for a possible bounce on cable, this is a daily time frame. It may act as a huge range to search for reversals. But between those two levels, I admit the possibility to form one of those patterns, or something between those levels may happen or may be formed in order to give us some indications about the direction for the price from these levels. So a flag, a wedge, a triangle, something will develop inside this range or above those levels, above those Fibonacci levels, in order to provide us with some guidelines, in terms of direction, as soon as the market achieves those levels. And always and again, do not ignore the possibility for cable to bounce from these levels, ignoring those levels below, those patterns below, because if the market decides to violate this bearish descending trend line, and if the price decides to trade above this huge support level, I admit the possibility for a retest of the daily resistance, and eventually the previous ones. Obviously, we have the Fibonacci levels to guide us if the price decides to trade above, and from those lows, we have the 38% retracement position there, the 50% retracement, and the golden ratio as natural fib levels. If the pattern gets completed below, we have the same targets, but these ones a little bit different. So we have now confluence between the 50% retracement and the previous daily resistance level, which it's interesting to see if the price decides to break, if the price breaks below the support and then later decides to bounce again above the support, as a potential resistance, breaking again above it, it tends to search for the next Fibonacci levels and the previous structural resistance and support levels. So at this point, we have the previous daily resistance positioned at the 50% retracement if the price decides to print this bullish crab pattern. Obviously, below a few points below, we have the major one, which will target the 38% retracement at perfect confluence with this previous structural support. So I will not ignore, and this should offer at least, in terms of reward, it will offer you a few more points to trade. That allows you also to adjust our risk, not losing more than what we expect to win for that trade. So that allows you to create a friendly risk reward to try along on cable from these lows. Obviously, with all those Brexit events and non-agreement with Theresa May and with NAFTA and all that stuff can shake those markets and eventually can change a little bit those price behaviors, those default expectations. But well, that's how we need to remain inside the market, very focused on those processes, trying to wait for the best price conditions to engage the market. And if you need to stay away, you stay away and you wait, sit above your hands and just watch the price and learn what the price is building, and try to get something from that price action. We are constantly learning in what I call inside what I call an hybrid market. So the market is always changing. Those patterns are always the same, but they are always printed on different market conditions, and we need to adapt those market conditions. We need to be hybrid also, to adjust our levels. To, if you are wrong, you need to position yourself again. You need to change your mental. Or you need to change your if you need to change your initial approach, so be it. It's there's nothing wrong about being wrong, actually, and we are only capable of learning being wrong. So if you are never wrong, first of all, I don't believe that's possibility. I don't believe that possibility to trade the markets without being wrong. It's impossible. If you have someone telling you that he never loses in one trade, it's completely nonsense. And I'm surrounded with some of the best traders in the world, eventually with one of the top 10 traders in the world. So I truly believe that that's not possible, because if that guy loses some trades, everyone will lose some trades, even here and there. So I'm not saying it's not possible to engage a good sequence of trades. I engage a good sequence of trades without losing a trade, with 5 trades, 6 trades, 7 trades without losing a single trade. But then I will engage a sequence of 1, 2, or 3 and 5 trades eventually against me, with 1 or 2 in my favor in the middle. So that trading we trade sequences of good and bad trades. And obviously, if you have a strategy to trade the markets based on the friendly risk reward, and if you have a risk strategy to trade, position management, what to do with your targets, how to partitioning your positions, how to trail your positions, how to use a dynamic stop or trailing stop to maximize your profits. If you use a strategy to trade, you will survive. If you don't have a strategy to trade, you'll jump inside the market as a gambler. You'll throw your coin. You'll short the market based on an emotional or a coin throw, and it makes completely no sense. And you'll lose the trades, and you lose your capital let's say faster than the usual or a regular trader who somehow have a negative ratio of performance, trading a strategy with huge risk. Okay, so we need to try we need to create a strategy that allows us to engage the market with a friendly risk reward approach, repeating a process over and over again during the next 500 trades, and you will succeed. If you don't have a strategy to trade, try to find someone that teach you how to develop one, how to get synced with your account financial amount. So if you have a small trading account, you need to be careful with your risk, because in a few trades you may end up burning your account. If you want to produce some money, you need to be careful about the risk and the position size which you engage the market. So you need to define all those criteria before trading with the market. So that said, I will finish for today, people. I hope you enjoyed this video. The objective for this video is just to offer you and to share with you, let's say, a trading concept based on Fibonacci levels and price structure, and well, supported by a conjunction of those Fibonacci levels. Those will print a specific advanced pattern or a harmonic pattern, and we can try to develop a strategy. We can try to stay focused inside the process. Well, and again, and repeating myself, to try to create a situation that allows us to engage the market with a friendly risk-reward approach. Well, that said, without going further, for today, it's Friday. I hope you had a nice and interesting trading week. For those who are learning, thank you for being here, and thank you for following. For those who are following, it's always a pleasure to be here and to share my knowledge with some of those who are learning process, and those who are already inside the markets with experience. Trading the market is always interesting to share my views with you as part of the educational content that I like to share with the communities. So again, thank you for being here. Thank you for following. All the best for you and your families, and have a nice weekend.